Hello and welcome everybody. My name is Mohammed Amir. I'm a senior program manager in Dynamics 365 Finance product team. Mainly, I'm focusing on fixed assets and asset leasing. And today we are going to cover the asset leasing module, which covering the LC accounting side. Our agenda today, we are going to discuss the asset leasing capabilities and the accounting standard beside leasing and asset leasing elements in the new module. And we will walk through the main business processes for the asset leasing. And at the end, we will have a demo. So from the module capabilities in the asset leasing, it is categorized for finance, automation, controls, integration, and business outcomes. So mainly for the finance side, we are complied with the accounting standard, the IFRS 16 and US GAAP AC 842. Also, customers will be interesting and looking for the dual currency to post the transactions in transaction currency different than accounting currency and reporting currency. And of course, we have the lease adjustments and index revaluation beside the dual reporting layers. So we are supporting that posting to different posting layers that supported by the standard AX or the 365. For the automation, we all the subsequent transactions for the lease could be automated by the automatic creation of the journal from the lease module itself, and starting by the automatic classification of the lease, because we will need to classify or to let the system decide for us based on our own setup the lease classification. Either it is finance lease, operating lease, low value, or short-term lease. The asset leasing module is integrated, of course, with chart of accounts through the posting profile. Also, we have integration with fixed assets, accounts payable, financial dimensions, and at the end, data entities, import and export capabilities. From the controls, we have the segregation of duties. We have mainly three security roles for the asset leasing. The lease administrator, or the employee who is going to be do all lease administration, configure the module, do the basic setups, and be able to post transactions. Beside the other two roles, one for only to view and the other one as a lease clerk. For the, of course, for the outcomes, we have the basic reports for lease commencement, movements, and forecast, and reports to help you to do your disclosure notes. Also, it is important to streamline the business process of the asset leasing across your entities or your companies if you have different companies. So this will ensure a consistent business process from the lease creation, the automated classification test, and also the journal creation. What the system will offer to you, it will increase your team productivity, because the system automates the complex calculations to calculate the present value and do all the subsequent measurement for interest calculation, depreciation calculation, and the team can focus on more business decisions. Moving to the very first step after we create the lease from the accounting standard, we need to classify the lease. So from the system perspective, we start to the classification to identify if the lease is short-term lease or low value lease. Then if the thresholds are not met, and of course these thresholds are configured in the system. So if it is not met, we will move to the second section or the second subset of the classification test to identify if the lease is operating lease or finance lease. In a very high level, how we comply with the US GAAP and IFRS. Now with the new standard, all leases are posted to balance sheet, except of course the low value lease and short-term lease. They are always goes or posted to income statement. For the finance lease, for both IFRS and US GAAP, are all posted to balance sheet when it comes to the initial recognition. And for the subsequent transactions, we have the ability also. It is posted to it is a balance sheet. The expenses, of course, they are posted to income statement. The depreciation, either the depreciation expense go to the income statement, and the accumulated depreciation goes to balance sheet. So in this slide, we'll go further down into the system elements and see what do we have. So in the asset leasing, we have the lease book, and the lease book carries everything. It will carry the lease information, the asset fair value, the asset useful life, the incremental borrowing rate, the commencement date when we start our lease, and then the payment schedule line, how much we are going to pay, the payment intervals, are we going to pay on monthly basis, on quarterly basis, or half year, and the end date of the lease contract. Then all these information are translated into a payment schedule where we have the present value calculated beside the payments and periods. And each lease book, this is the brain of the module, where we identify what's the accounting framework we are following. So the lease itself can carry more than one book. So you can have a book for IFRS, and you need to have a reporting in US GAAP or vice versa. Of course, each one needs to be posted to a different posting layer to have better representation of the reporting, and also identify if you want to let the system define or automatically identify the lease type, or you need to know, okay, this lease is operating lease or finance lease. And here also we identify the thresholds for the lease terms and present value, of which used in the lease classification test, as well as the short-term lease and low value lease. Then after the system calculates the present value and identify the accounting framework or the accounting standard that we are going to follow, and the lease type, either it is operating lease, finance lease, low value, or short-term lease, we will move to the lease classifications and transactions. Mainly, we have 4 types of transactions. The very first one is the initial recognition, where we hit the right to use asset account And by this, we are increasing our balance sheet with the right of use asset and the other side with the lease liability. Then we will take the process to the next step for the interest expenses or the lease amortization, where we increase the lease liability against lease expense, and then the lease payment, where we are paying out the money at every month or every period that defined in the lease setup. And here we are decreasing the lease liability account. And of course, at the end, we have the lease depreciation. And this depreciation is one side for the expense, the debit side, and the credit side is the accumulated depreciation. As we see in this slide, for US GAAP, we support operating leases only, because in IFRS there is no operating leases. For finance lease, we support both IFRS and US GAAP, and as well as the low value lease and short-term lease. Of course, the accounts we are seeing now, it is a high level, and it is configurable on the system itself from the posting profile. Then we are moving to the asset lease posting, business proceeds. So we have a lessor who owns the asset, and you agreed with the lessor or the landlord to lease the equipment or the building. So you will have the contract and then the lease data, the commencement date, if there are incentives, dismantling cost, and so on, and the payment. Then we will need to move to the classification test to identify the lease type, and then the lease payment, and calculate the present value, and take the calculated present value to the initial recognition, where we are starting our lease. And then we have the subsequent monthly transactions, the liability amortization, payments, and depreciation. Of course, we have lease adjustments at the middle of the lease life. You can post or you need to have an adjustment if you got a new agreement with the landlord, or you need to adjust anything in the lease. And of course, it will follow the adjustment procedure, where getting the carrying value from the lease liability schedule and calculate the new present value and get the difference and generate the adjustment transaction. And we have the lease impairment and index revaluation that could you run every month or every period. You need to revalue your lease. Of course, all transactions are posted to general ledger through asset leasing journal. For the initial recognition, this could be, if we activate the integration with fixed assets, could be posted to fixed assets module as an acquisition. The payment could be posted to accounts payable module. We will look in the next slide at more details in the integration points. Here, the user starts by create a lease. Of course, this lease could be created manually or through data management by import the data. Then we need to create the schedule. At the moment we click on create schedule, this creates behind the scenes, grab the lease books, which are attached to the lease group. And at the very moment, the system classify the lease or run the classification test to identify the leases, operating lease, finance lease, and so on. Then calculates the present value, and this where the system reduce the manual work to calculate or to do all these processes manually. And we have 4 schedules. We have lease payment schedule, lease liability amortization, and lease depreciation. Then the lease administrator need to make sure the calculated amounts are what he or she expects. And after review the calculated present value, the amounts in the lease payment, liability amortization, and the depreciation, and everything is good, we are ready to go and confirm the schedule. When we do confirm schedule, the system will generate or will open for us the option to generate the initial recognition journal. And this will be posted to ledger accounts through asset leasing journal. And this is a specific journal for asset leasing. So if we link a fixed asset ID to the lease, this means you want, okay, I want to follow my leases or to have my leases in the fixed assets register. And I want to run the depreciation from the fixed assets module. If we have take this decision, this means at the time of generate the initial recognition journal, the system will post the debit side to the fixed asset ID, and this means this will be posted as a fixed asset acquisition. Of course, you will need to configure your fixed assets posting profile to be posted to the right of use asset ledger account, because eventually this should be a right of use asset. From the system point of view, if you decided to do that, so all subsequent transactions related to the fixed asset will be executed from the fixed assets module, like depreciation, disposal, anything related to the fixed asset will be posted from the fixed asset module. Then in each period, you will need to generate the payment, liability amortization, and lease depreciation if you did not link a fixed asset to your lease. The payment could be posted to a vendor ID or to a vendor account if you assign a vendor account to your lease and identify on the book itself, I need to post my payments to a vendor. And this will generate vendor invoice journal and accounts payable. And then the payment cycle will be taken from the accounts payable side by create a vendor payment journal. The other way to post the payment to a clearing account, and this clearing account will should be paid manually or cleared manually by a payment journal. So let's move to a demo on the system itself to walk through a quick scenario. Okay, in the D365, first thing we need to know, the asset leasing module is under feature management. So you need to go to feature management. And move to all, filter out asset leasing. I already enabled it in this environment, but you will need to enable the module. Then we have the asset leasing module under leases, lease summary. We will create a new lease, or we can copy a lease from a current active lease. So let's say this lease description, and this is the asset fair value. And then we have the incremental borrowing rate. Let's say that our compounding interval is monthly. The asset life, let's say 24 months. And the lease group is building. Here, I just want to show you on the lease building or the lease groups, we can assign the lease box. And in the lease box, we identify the posting layer, the lease type, the accounting framework, and these are the thresholds we discussed earlier in the slides, which are used in the lease classification test, either to short-term lease, low-value lease, or operating lease or finance lease. And from this option, we say if we need to pay to vendor or not. Going back to our lease, let's say our commencement date is 1st of Jan 2020. And here in the payment schedule line, the system proposed our start date. Let's say this lease is for 24 months. And we got the end date, and this is the payment amount. These are the minimum data we need to create a new lease, and here create schedule. As we hit create schedule, as we mentioned, the system ran through the classification test and calculate the present value. Going to books, because we have two books assigned to building group, the system create two books. And going further down here, and we see the initial right of use asset, and this is the calculated present value, and the initial lease liability. Moving down here to the lease classification test, and the system here says it is the lease type is finance lease. We are ready to go to payment schedule. So here also I will see the calculated present value or the initial right of use asset. After I review everything and I'm fine, I confirm schedule, initial recognition. This will create an asset leasing journal for me, debiting the right of use asset and credit the lease liability with the present value amount. I will post the journal. Then I'm ready to post the subsequent transaction. Let's say I will post for January, the lease amortization schedule, and this means I'm going to post the interest amount, and here this is the interest amount, debiting the interest expense and crediting the lease liability account. This means I'm increasing the lease liability. And then payment journal. And post payment. And lastly, we have the depreciation. Of course, for the depreciation, we are following the accounting standard as we are depreciate the amount using the straight line service life. And post. And in this form, we can show the accounting currency and reporting currency. And the reason for that, we are following the standard of the currency translation. If we post the lease in a different currency other than the accounting and reporting currency, so for the initial recognition and the depreciation, we will take the exchange rate at the commencement date. For payment and liability amortization, we'll take the spot rate as we create that transaction. And post. So now we have posted initial recognition, the lease interest, payment, and depreciation. If we look at if we want to check the current balance of the asset or the right of use asset, we have the initial recognition transaction crediting or minus the depreciation expense. And here we have the asset balance. And the same for liability transactions. We have the liability side in the initial recognition, which is credited. The interest transaction, which posted at the time of amortization schedule, is also credited, and the payment. Here, if we want to adjust this lease, we can adjust the book, and this will open up the adjust book, and we can update whatever we want. Let's say this will be 6%, create schedule, and we will move to the same exact sequence by confirm the schedule from payment schedule, and then we can post. Firstly, of course, we need to post the lease adjustment and then post the subsequent transaction. We have all the transactions we have, so except the adjustment, we can post them through batch journals. From the batch journal creation, we can post initial recognition, payment, amortization, depreciation, as well as the expense and short-term lease liability reclass. And I can filter by lease group or the book ID. I can create proposal journals if I want to review them before posting, or I can mark this option to post it directly. Also, the creation could be on the spot or through batch jobs. Also, the lease confirmation and create create schedules. Both of them could be ran through batch jobs, so there is no need to confirm lease by lease. And finally, we have subset of reports to cover, let's say, we will need to look at the commenced assets or these commencements during this period. Let's say March. And for all reports, we have this option to select in which currency we need to print the report, in accounting currency, reporting currency, or transaction currency. Let's say we want to print this report in accounting currency. me enlarge this one. So it showed me the lease ID, the lease description, lease box, and the classification of the lease, the commencement, the initial liability amount, and initial right of use asset amount. Also in the periodic transactions, we have the index rate revaluation, which lead us to check the index rate types where we identify, let's say, the CPI and the index rate per month, and this need to be hooked up to the lease itself. So let's say this lease, and I will copy this one. Here I identify the CPI as index rate type, and this is the revaluation date by 1 month. So we will start reevaluating this lease at 1st of February. And this is the inherited index rate at the commencement date, which defined in the index rate type. To run the index rate reevaluation under periodic, this would run across all leases, or if you want to filter out some leases, and it will give you a proposal of the calculated amount for ASC or for each book. Here we have a difference in handling between the US GAAP and the IFRS. For the IFRS, we will adjust the asset and liability, but for the US GAAP, it will be posted, or it will update the variable payment of the future. So the difference we have in the index revaluation logic for IFRS, it will adjust the right of use asset and the lease liability by posting a transaction to hit these two accounts. But for the US GAAP, it will update the variable payment of the future periods of the lease. Of course, if I hit OK, this will execute what we see in the screen. If we had choose to cancel, this will roll back. This is what I have today for the demo. So the main takeaways, we have the release note for the asset leasing. It has more details of the product capabilities, and also we have the announcement blog post, as well as we have the private Yammer group. This is only for PEEP customers. You can register yourself to the PEEP program, and then you will be able to join us in the Yammer group to have direct discussions with us. We would love to hear your feedback, your ideas, and also what you are looking for. Yeah, thank you. I hope you enjoyed the session. Stay safe. Bye.